The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 12th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future. Excuse me. Pioneers of our future versus prisoners of our past. You shouldn't eat so close to when you're going on the air. I can tell you that. Hey, I hope you're having an extraordinary day. And if not, let's make sure that we do. And of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, and I do mean that, most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. All you have to do is send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question. And, of course, inside the Tiger's Den like Mike K. Any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 487, trade down at 25,502. S&P down 44 points, 2736 is the number. In NASDAQ 100 off 2 3/4%, trade down at 68.48. So it's mean and red across the board. Green, spot volatility index trading up $2.97, 17% to the upside. Don't know what the end of day close is, but you do know the routine if it is greater than a 10% one-day rate of change at the close out there. What we do know about the spot volatility index, even though you can't see it on the screen if you watch this on TigerTV, we know what it's trading at, 2035. And we also know is, again, it's trading beyond all of the forward futures contracts. You know what that means. Yes, the move is real, but it's not real, if you know what I mean. Right now, we've got light sweet crude up 17 cents. Natural gas having a big day, up 2%. Leading the charge, the upside dollar-wise, it's Aptio Inc. up nearly 13 bucks. Athena Health, that's on a buyout, up 11.50. Tilray is up 5. Equinix is up about 5 to the downside. Amazon leading the charge off 4%, 74 bucks. ABIO Med down 73 bucks, 18%. Booking Holdings down 29. Google's off 25. So certainly we have things to look at to the upside and to the downside. Couple questions that have come in. Let me just take a look at the first one that came in here. I see we got 1, 2, 3. Oh, we got this guy here, Mr. 666. Yeah, Mr. 666. Good luck. I hope you're not managing anything other than Monopoly money out there. But let's take a look at the first legitimate question that came in. This one is from Eddie. I think it might incorporate basically his question to what we should probably talk about first. But could the NASDAQ Dow and S&P pullbacks be merely a Fibonacci retracement from the lows on each index that occurred on October 29th? NASDAQ has been the weakest, and it makes sense that it would retrace to the 0.618 retracement level. So, yeah, obviously the answer is yes. The question that I posed inside the Tiger's Den was, did we just make the C point of an A to B equals CD to the upside? So, Eddie, let's try to explore both of those things out there. But you mentioned the NDX 100, so let's do this for our home gamers out there, which basically is everybody because we don't have a live studio audience. But you're welcome to. If we take a look at what Eddie is referring to here, is he's taking a look at the retracement off of the low as he's pegged it, October 29th, all the way to the high up here on the trading day of November 7th. And what he identified is that the retracement thus far that's taken place, the 0.618, I don't know how these Fibonacci numbers work. I just know that they do. And the 0.618 retracement level was 68.15. The actual low, 68.19. For our work, yours and mine visually, as we take a look at the screen out here, we're like, okay, that qualifies. And what Eddie had mentioned was if we take a look at the S&P 500 as an example, and we look at its retracement out here, we're going to see, and I don't know what it is. We're going to find out what it is. Now, Stevie's just used what? It's only a 0.382 retracement. It's kind of interesting. When I pose my question to you guys in the den and gals in the den with regard to we just made the C point of the A to B equals CD to the upside, it was not with regard to Fibonacci like the work here that Eddie's done. If the answer is yes, and we're going to try to go and figure out if the answer is yes, but if it is, here's the one thing you and I do know. So let's go with the assumption. Let's go with yes, it is, just for the heck of it. Blanks and giggles, you fill in the blank out there. If it is, what we know is that if it's only a 0.382 retracement, then that gets us back to the all-time high. In fact, what you and I would say gets us beyond the all-time high, and I'm referring to the all-time high that occurred out here on October the 3rd. I think it was the 3rd. Was the 3rd or September 21st? I think it was the 3rd out there. Yeah, because it would be one powerful A to B equals CD. That's right. You heard it here. You heard it here first. To the upside. So now we know that you've got a 0.618 inside the S&P. The Russell 2000 has been a bit weak as well. Let's go see what its retracement level is. Looks like a little bit more than a 0.382 retracement out here. So let's go from the low to the high. So probably about a 50%er out there. Let's take a look at the Dow. Let's go ahead and finish this off, both for Eddie and for you out there. And let's take a look at it. Let's go from the low. Let's go to the high out here. And yeah, only a 0.382 retracement. Now, wide-ranging bar, albeit, but what's really gone on inside the markets? Why did Stevie say or pose the question inside the den? Well, I'm not eating that for lunch again. That's for sure. Of course, I said that after I ate it and before I did the show. Now, I'm not going to tell you what I had for lunch, but I'm not eating it again. And if we take a look at the reason why I posed that question was really from the standpoint, if I took a look at what the ES Mini was doing or is doing at this stage of the game, it's just testing Stevie's red line. If we take a look at Stevie's red line, if you watch this on the screen here, we can see the nice bottom that was formed out here when it created that Rhodes momentum indicator bottom. And now what price is doing is pulling back and just simply testing Stevie's red line. So if it's a test and rejection, I don't know if it's going to be a test and a rejection, then it could be the C point of the A to B equals CD to the upside. Now, sticking with the ES Mini or sticking with the S&P 500, just so that we can contain our thoughts here, if they can be contained, if we take a look at what's going on inside the TAS market profiles on the very left-hand side, you're going to look at the ES Mini. Prices come down to the center line on a daily basis, the point of control. It's also the center line on a weekly basis of its point of control. That says we have a whole lot of buyers and a whole lot of sellers that believe that fair value of the ES Mini is right here, right now. Yeah. Now, that doesn't mean that they can't be overwhelmed. It's easy to get overwhelmed out here, but it's going to take a lot of power to overwhelm them. And if it does, well, then that says price is headed to $26.95. But as we speak right now, this is where, if there's going to be a bottom out here, it's going to happen. Pronto. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were just trying to answer the question for Eddie. He was taking a look at retracement levels inside of the indices out here. We saw that the S&P had made a 0.382, the Dow 0.382, the NASDAQ 100 a 0.618 retracement. And at the same time, we took a look at the ES Mini. If we take a look at the Dow out here, we can see that the Dow Equity Futures contract, if I pull up the indice, we'd see about the same thing. And that is that price is testing Stevie's red line, which is a level of support. I don't have any idea whether it's going to hold or not at this stage of the game out here. But if it does, that would make sense. It's a level of support. It's a level of support that even inside the newsletter on the retracement level, we said, let's watch that as the next key level inside of the equity futures contracts out here. Here are the equity futures contracts because we also have some other data we can use. You heard that commercial, maybe you did, from the TAS market profiles folks out here. These show the TAS market profiles, and inside the NQ, it's especially important. And the reason is because if we take a look at the daily time frame chart here, you're going to see prices below Stevie's red line. So that says, okay, you've broken through a level of support. Are you headed lower? Well, the easy way for us to answer that question, or at least let the market answer that question for us, is trying to understand, hey, is there any reason that the NQ stopped where it did so far today? Or what's the level we should be watching? It's an excellent question. I'm glad you asked. If we take a look at panel number 2 from the left-hand side, you're going to see green and blue lines. The green lines represent the weekly TAS market profiles. The blue lines represent daily. What we can see is price got down, not right to the tick out here, but close enough. The bottom of its weekly profile, this is a bullish structured box, by the way. It just formed this week, Sunday, yesterday. And the bottom of that box is 68.10. The actual low that we've seen so far has been 68.25. So, and it's down at that point of control level for the daily time frame chart. Again, the point of control, think of it as this. Both buyers and sellers believe that that is the fair area for price inside this instrument. They're all just kind of segregated there. They're just hanging out, having a good old party. trying to prove which one is right or wrong out here. So the NQ has also pulled back to a level of support that you and I can identify. That's the reason I pose that question. Hey, are we making the C point? Very much like Eddie is in essence asking the question, is it just kind of a normal retracement? Well, you and I get to take this one step further out here, or a couple steps further. One of those places that you and I get to look, and I know there's some questions that have come in, but maybe by going through this process, maybe I answer some, maybe I don't. Here, if we take a look at the very left-hand side, very left-hand quadrant, you're going to see spot volatility index trade out of 2051. You'll notice below it that I have the S&P futures contracts out here. These take us out to June of 2019. In June of 2019, the volatility, the futures contract is trading at 1879. So we are back inside that backwardation. That means it's totally backwards. Blank backwards, you fill in the blank out there, and you get the prize. But what is that blank backwards, backwardation of the VIX and the VIX equity futures contracts typically mean? It's a great question out here. Here, if I take a look at the 6-month version of the spot volatility index, I don't know why it's not going all the way back. Shoot, I'm just going to go to the 3-month version out here. Whoa, what's going on? I got a data flow issue. That's okay. Those green arrows, by the way, if they show up on the screen, what you're going to see is bottoms inside the market when that backwardation, when the multiplier, or the divisional computation of take a look at the spot VIX index divided by 3-month or 6-month or even 1 year gets above 1. We're above 1. We've been above 1. We're in this kind of messy bottom formation, just like we were back in the February, March, April timeframe out there when we saw a series of those indicator tools here. Okay, just populated so you can see the other bottom signals inside the S&P 500. Hey, Mr. or Mrs. 666. Have some stops in place, for goodness sakes. You have been short since 2015. And I don't have to remind you how far the market has advanced since then. Just utilize a set of tools like this to help you gauge what the message of the markets is, especially right now. So here we take a look at spot VIX index. Now, this is going to be an end-of-day tool, and I don't know what these indicator readings are going to be at the end of the day. I just know what it says at 1:23 in the afternoon. So, no, Tim, I'm not really wearing my Santa hat. I'm not saying tomorrow is going to be a turnaround Tuesday, although it very well could be out here. What I'm saying is there's a set of tools that you and I can use that are reliable for helping us to identify whether it's tops or bottoms. Right now, it's measuring a potential bottom. We also know that one-day rate of change greater than 10%, that's a good indicator of a bounce or bottom out there. It's one or the other, and it's a really reliable tool out there. If I take a look at the New York Stock Exchange, here's the other thing we know. We know that the New York Stock Exchange, the advanced decline oscillator reading on November the 7th, got up to a reading of 211.20. That's way above 150. All the other readings above plus 150. Now, when I say all, don't somebody go out there and catch me and find one that's wrong, because there is one that's wrong. But that's pretty much about it. But once you get above plus 150, it tells you and I, hey, we're going to see higher prices in the future. And I'm not referring to back to the future like years from now. I'm referring to in the future, and we're in this favorable seasonal cycle out here. Now, the key here to all of this coming together is going to be that spot volatility index closing back below the 50-day exponential moving average. Right now, it's measured at 1768. We're trading at 2044. Not saying that's going to happen today out here. But when it does get back down below, and it will get back down below because it knows it's way out of sorts. It is way out of sorts. You can go back, you can study the spot volatility index along with all of its futures contracts, and what you're going to find is what you and I already just took a look at. This is not unusual. This is not what you see in bear markets, folks. This is what you see when you have retracements, violent or not, where it's just totally out of whack, where the short-termers, they're just kind of nuts out there. Or maybe that's me out here. But just go back and study it. Just spend your time just studying that tool out there and not worrying about whether you call it a fear index or anything. You'll find it to be one of the great trading tools that Stevie just went ahead and shared with you. So I hope that helps you out. Now let's go to another set of questions that have come in. One from Tom G, and the other from Mike K in the den. And I think we can try to go ahead and combine these. Although, Tom's, your question just disappeared from my screen. But I know you were inside dust, or are inside dust. And Mike is wanting us to go take a look at McEwen Mining, MUX. So if we take a look at McEwen Mining, not that this is the bellwether for where mining stocks are going, but it's a part of it. If we take a look, Mike is concerned, and he should be, that McEwen Mining is now trading below. This is a weekly chart, by the way, that we're taking a look at. Trading below the swing point that began December 4th, 2017. That low is 182. We're trading below. Now, there was about 11 million shares. It's only Monday. We're already about 1.2 million shares. I don't know what the volume is going to be. But the reason that Mike and anyone else should be concerned about McEwen Mining is because if it does close below 182 come Friday, if it does it with more than 11 million shares, then yeah, it's headed lower. How much lower? Geez, the only level of support or place where price would target this, Mike, takes you back to 2015 to 65 cents out there. Not saying it's going there, but it most certainly could. Right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So to finish your question, Tom, by the way, Tom is inside of dust. It's a second trade for the day, and he doesn't like to hold things for very long, usually not overnight, and just wants me to take a look at it and give him a feel for, what should he be watching in essence out here. So here's dust, and a great trade at this stage. In the case of dust out here, if you're just looking at the daily time frame chart, and I was to disregard what gold is doing out here, we take a look at it. We draw a line like this, Tom. We would say, okay, dust moved downward on October 11th with 4.1 million shares. A gap to the downside. Gaps are our friends. Those little windows or gaps help us to identify levels of support or resistance. So 4 million shares. The first time dust got up there was October 31st with 1.8 million shares. So less than 50% of the volume out there, and then it would kaput. Today, you're up with 1.3 million shares. Now, granted, it is more volume than October 31st, probably. It's 1:30. We've been trading for 4 hours, so you can take 1.3, divide it by 4. That's going to give us about, 350 or so. So 350 times 6.5 hours is 1.8. Plus, I don't know. It's a couple. What it is. It's short of 4 million out there. So, volume-wise, if you're just going to make a decision, Tom, just based on the way dust is reacting, probably good not to hold it overnight out there. Now, what would change your mind or somebody else's mind that that's not the correct decision? I'd say watching gold from the standpoint of right now it's just testing a rising trend line. The house of the rising sun. Now, the sun might be setting out here. This might be a sunsetter. In the case of, just take the low of gold from August 16, use as your next touch point, probably the low of September 28th out there, and you'll see so far the low of today basically is a touch of that little rising trend line out here. If I take a look at what gold is doing in euros, they are not moving to lower ground today. So that's got to make you say, something to think about. In the case of traders of gold in yen, it is moving to lower ground, just like it is in dollars. So here's your battle between the bulls and the bears, so to speak. I'm not saying that buyers of gold and euros and also Great British pounds are necessarily big buyers today, but what they aren't is sellers. And that's what you would really want to see. You'd want to see this metal, or anything in this case here, but this metal trading lower in all currencies to say, maybe you would go ahead and hang on to dust overnight. So, Tom, I hope that helps you out. Mike K in the den, I hope that I helped you out as well. By the way, I'm sure you saw, Mike, that the monthly chart for McEwen Mining, well, here, maybe you didn't. Let's just make sure you do, MUX, that the monthly chart does have support at 136 or possible support. That is the monthly TAS market profile out there. So it's a possibility it would stop there before it gets back to 65 cents out there. So you know what you're looking at. Trading below $1.82 is not a good thing as we speak. Ruby Tuesday is asking a question on Monday, and Ruby wants to take a look at the December gasoline contract out here. Now, Ruby didn't tell me what it is that she was looking for, but if we do take a look at the long-term, short-term market profiles for the gasoline contract, we're looking at December. We got the 60-minute, the 240-minute. We have the daily, and we have the weekly chart out here. Now, what the daily is telling us, Ruby, is that it's trying to form a new profile out here. The reason why we believe that is because the bar has turned orange. So tomorrow we may have more information. Doesn't guarantee us that we're going to have a new top, center, and bottom, but it's a pretty reliable indicator. At least that's what it's trying to do here, is form that new set of profiles. So also check back with me tomorrow on Ruby Tuesday. If we take a look at another level that gasoline futures need to close above, if you're looking for a bottom out here, and I suspect that you are, you'd like to see price get over, close above 1.6562 on a 4-hour time frame. Tested it. The first time that it tested was the close at 8 o'clock, 4 hour, 10 o'clock. and now we've got the close of 2 o'clock. So that level has acted as resistance. Doesn't mean that it's topped out, but if there were a counter-trend rally and gasoline were to stop somewhere, that's where it is. On this 240-minute chart, we haven't seen it close above the top of a market profile, well, since the end of October out there. So it's a real key level for you to be watching. But if we expand out to the daily time frame, has light sweet crude. Now, in this chart, by the way, I apologize. I can't pull up this chart on my Ninja Trader software, but the patterns are somewhat similar with regard to light sweet crude. So if it's okay with you, I'm going to pull that up because the question now is, has it bottomed? If it's bottom, we probably see a bottom inside of gasoline as well. And here's what we know. I don't know if the same pattern is inside the gasoline futures contract or not, but what we can see here is that on Friday, what light sweet crude did was it formed a Tom DeMark setup 9 count. Now, oftentimes, not always, but oftentimes there's one of 3 things that take place when this count arises. One, you can see a change in trend. Well, if Ruby is taking a look at trying to be long, well, there's your possible change in trend signal. Hasn't guaranteed it, and you would need to see price close above Stevie's red line, 62.45 as we speak right now. Because it doesn't always work. It can also be a pause out here. Take a look at this little TD setup 9 count back on October 17th. What that did was that set up a pause for 1, 2, 3 days before it went ahead and continued to move lower. So right now, it can either be a pause, a little hiccup, so to speak, a change in trend out there, and that's what it is you'd want to watch. Do these 9 counts work on light sweet crude? That's an excellent question. I am glad you asked that question, because if we do go back and we take a look at June 6th out here, we'll see that was the bottom. And if we take a look at the July 3rd high, that was the top. That was a Tom DeMark setup 9 count. If we take a look at the bottom on July 17th, it was Tom DeMark setup 9 count out here. If we take a look at a slight change in trend to hiccup, this takes us to August 31st. Yeah, that worked too. By the way, those sessions where it identifies a change in trend sideways can occur either on bar 9, bar 8, or it can be the following bar as well out there. So that's what I would be looking for, Ruby. I hope that that helps you out with regard to your question with regard to gasoline futures out there. BW writes in, so let me see here. He says, this is Brett. Hey, Steve, if 10% plus VIX changes the direction opposite, the next date is 20% plus negative, the 10% up. No. Hope your question makes sense. I think I get your question. Your question is, hey, if we have a one-day rate of change of plus 10%, the next day it's minus 20%, does it? Do they cancel each other out? No, actually, just the opposite. Let me show you what I mean. Let me try to show you what I mean out here, because it's a great question. I'm glad you had it. I'm glad you asked. And what we're going to look for out here are, on occasion, we get a blue and a green arrow. Here, as an example, May 29, 2018, you had a one-day rate of change of plus 28%. The next day, it was minus 12%. What you and I look at is just 10% is our threshold, above or below minus 10%. When you get below minus 10%, less than minus 10%, it's called an initiation move, typically. They don't cancel each other's out. We use each day separately. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of our donors pointing out to me that the ES Mini, the 30-minute chart, that's what's up on the screen here, is in wave number 6 to the downside. And I would say that if we see a push lower in towards the end of the day out there, and it's very likely that we would, I don't see a reason why we won't, and then maybe a push back up, is that not this hour at 2 o'clock, but at 2:30, what we could also get out there, Mr. Z, is we could get a push lower to get wave number 7, and we could get one of Stevie's Rhodes momentum indicator bottom signals out there. So that's what I would be watching for in trying to put together what we know about the spot volatility index and its futures contracts as we take a look at the ES, the Dow equity futures contract, the Russell 2000 also, by the way, also testing Stevie's red line, which is a key level of support after the bottom that it formed out here. So these would be all the reasons to be paying attention to the shorter term time frame charts to, give you that signal where you could see on the intraday time frame chart a Gartley buy pattern. So we were looking at the 120-minute time frame chart. We can see that it's done more than the 1-to-1 A to B equals CD to the downside. It's as we had pointed out earlier at the beginning of the show, inside the ES Mini, it's just a retracement. So if we were to see some type of bullish reversal candle, on this 2-hour time frame chart, that would give us indication that you've got a Gartley buy signal. We're not there yet. I can't call it until the market calls it. That's why you and I just have to know what patterns that are out there that we should be focused on, and then let the market do its thing. And when it does its thing and it goes ahead and generates the message, then that's the message of the markets, so to speak out here. Let me take a look at other questions. I think I've gotten to everything inside of the den. And we've also got, let's see, Tim writes in and says, are you thinking we retest the bottom inside of the Qs out here? Tim, the easiest way for me to answer that question would be to focus on the NQ chart. So Either it has bottomed or is very close to bottoming because prices move back to the bottom of that weekly profile level. Hasn't gotten there yet, so another push down to test it would also make sense to me based on what we just looked at inside the ES Mini, is that 68.10 level. Now, if the NQ closes below 68.10, then that says that price should likely go back and test the bottom of its daily bullish structured box out here. We have two bullish structured boxes. I know you might say, what do you mean jelly bean? I threw in the jelly bean, but here's what I mean. If we turn off price out there, I used to say that to my kids all the time. And if we, you probably did too. Here we turn off price. In fact, let me do this too. This makes it easier. We'll do it both ways. Here's the daily profile. Only the daily profile's out here. Whoops. Only the daily. And you can see this is a relatively new daily profile. Center line closer to the bottom than the top. Bullish in structure. So there'd be nothing more bearish than a close below 67.0650 out there. But that should be support. Should be, could be, would be. Only time will tell. Center line of the box is, in this for the NQ, is where we have both buyers and sellers comfortable with price. Now, if we come back to the same chart, we turn off the daily and we turn on the weekly profile, it too has a bullish structure. It's a wide box, by the way. So if this does hold, we do get an A to B equals CD to the upside in the other industries, and therefore also too in the NQ. And I know, Tim, you're focused on the NQ. Then this says it goes on and it makes a new all-time high, which just makes sense based upon the cycle that we are in from an annual, seasonal, second or midterm presidential cycle, the whole 9 yards out there. But the key level here is going to be 68.10.15 holding. That is the bottom of that profile. So now we can just color it all back in. We can add back the dailies. We can go ahead and add back price. And then so we knew what to be looking for if we turn price up, just simply going ahead and using those profiles out there. So I'm not saying at this stage here that price has to go back and test that. It needs to close below the bottom of that weekly profile out there. And right now what I see inside the NQ is two key levels of support-ish. Very key support inside the weekly, and support-ish from the daily standpoint because it's by that center of the box out there. And all I'm doing is just narrating what the charts are communicating to you and I. So I hope that helps to answer your question that you had. Looks like we have a follow-up question here from Eddie. Eddie, one question per show. I'm just kidding you. Just joshing you out there. Eddie says, what's the volume on the indices telling us today? You know, Eddie, I don't use the volume matrix that much for the indices anymore. I found them to be almost absolutely useless. And instead, what I have, this is from my trading, this is from my experience, is that now for the individual equities, whole different story out there. But the problem with just, for example, to just give you just kind of like the Stevie logical thought out here. And in the old days, many years ago, many moons ago, we could look at the QQQs from a volume standpoint and say, okay, it's a pretty good representation of the market out there. I ask you, how many different vehicles are there for trading the NASDAQ 100 today compared to, let's just say, 10 years ago? 10 years ago, how about go back 15 years ago when it probably made sense out there to go ahead and use it? You need to have one source that can compile them all in order to be able to provide you with that information out there. Now, Tom's got his Bloomberg system. It gives him accurate information with regard to the indices. There, at least, is something more valuable that you can trust. But to go ahead and use it for the ETF structures, I'm not going to blow smoke up your you-know-what out here. Just not going to do it. But if we were just going to rely upon that, I'm saying I'd rather rely upon the daily equity futures contracts and its patterns, the seventh wave moves, the Rhodes momentum indicator tops and bottoms, the A to B equals CD patterns, more reliable, much, much more reliable. Volume today, by the way, to answer your question, 35 million shares. Inside the Qs has 148. Last time we were down here in October was 111 million shares, so nowhere near the volume. So it just says it is pushing lower with light volume, but you're trading inside that swing point, and you can always go test the bottom out there. But what's nice here, Eddie, is that you and I and Tim, because Tim was asking about the Qs as an example out here, we know that we can also rely upon those TAS market profiles for the equity futures contracts. And that, to me, is just more reliable at being able to help you understand where the markets are going and why and how we can go ahead and use this. So thanks for the follow-up question. I hope my follow-up answer helps you out. Oh, we have 2 follow-up questions here. And actually, I do love it. So I'm just saying it in jest. And that's coming from Tom G. So Tom is saying, Steve, if you have any chance, please let me know your thoughts on SPXL long. I just entered the trade at 44.01. Hey, you know, what do I think? Here's what I sort of think. I can't tell you sort of think. You just got to wave number 7. How about that, Mr. Z? How about that, Mr. T? I call it Mr. Tom T and Mr. ZZ out here. So while I was bloviating out there, the ES Mini did go and make a slightly lower low, getting us to wave number 7. So maybe a time to right to the T, Tom. I don't know. What I'd really like to see here is in the next half hour, one more push lower. So wave number 7 can extend. It's not till you have a higher low on the next candle. In this case here, the 30-minute candles, that you would get a confirmation. Because I'd like to see that Rhodes momentum indicator signal too. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
welcome back. Hey, Tom, Eddie, Tim, Brett, Ruby, Mike K, Z. Look, I want to just say thank you to each of you for writing in questions. It just makes the show go so much easier. Of course, every now and then I get off track or what have you, but it just makes it's just so much better, you know, when you guys, gals, send in questions. It just keeps me really kind of focused and directed and gives pertinent information to what you were looking for. Before we went to that break there, Tom was telling us that he went ahead and took a long position inside the S&P 500. And what we noted was that we had gotten down to that seventh wave move. Oftentimes, not always, when you make that seventh wave move, you see kind of almost like a Tom and Mark setup 9 count, only it's counted a whole lot differently. So Tom, in Tom Eddy, I said Tom and Eddie. Have you ever had that Tom Eddy Elodian? Nice Cabernet out there. I'd recommend it. It's a good wine. But Tom, now referring to Tom here, you'd really like to see the ES Mini close above Stevie's red line, and the actual red line number. I was going to try to give it to you. It looks like it's about 27.47 would be the number. So you'd really like to see a close above that. Then what you would anticipate, a newer short-term trader, you should get a move then up to the 27.64 level. So that's what I would be looking at for the ES Mini. We didn't talk much about the Dow. The Dow, by the way, has traded down to support. Support for it is the top of its brand new daily profile that formed last night, this morning out here. The top of that is 25,545. So we saw support for the ES. We saw support for the NQ. I don't think we talked about support for the Dow, but there we have it. Also inside of the Dow, and many times these things happen simultaneously amongst each other. Not always, but you did get to wave number 7 also inside of the Dow. You'd be looking for its equity futures contract to close above really 25,638 to prove to you that there is a bottom at this stage out there. So, folks, thanks so much for being here. Always great to be with you. Keep sending those cards and letters. Hey, even if you're Mr. 666, we at least recognize you. But the Dow will hit 40,000 way before it ever gets to 666. You heard it here. You heard it today. Stay tuned, folks. Your favorite polar bear, David White, he's up next. Following David, you've got the Tom O'Brien from 3 to 5. I'll be back with you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.